Oil prices are falling, and European stocks are rising this morning. And the reason comes down to one headline. The United States appears to have stepped back from planned military strikes against Iran. Global markets moved fast on that news. Crude dropped meaningfully in early trading. European equities climbed broadly. The pattern makes sense once you understand what markets had been pricing in over the previous days. When credible threats of military conflict emerge in the Middle East, oil traders respond quickly. The region sits at the center of global energy supply. A large share of the world's crude either comes from there or travels through it, most critically through the Persian Gulf, one of the busiest energy corridors on the planet. Any serious threat to that flow gets reflected in prices almost immediately, as traders build in what is called a risk premium. Essentially an extra cushion of cost tied to the possibility that supplies could be disrupted. That premium had been sitting in the oil price. With the threat appearing to recede, at least for now, that cushion is unwinding. Prices are giving back what fear had added. Equities tell the other side of the same story. When geopolitical risk fades, investors grow more comfortable putting money into stocks and other assets they see as riskier. The logic is straightforward. A world with less chance of a major disruptive event is a world where the economic outlook looks a little steadier. European markets reflected that thinking across the board this morning. Now, the important caveat: geopolitical situations move quickly, and today's calm can become tomorrow's tension with a single statement or incident. Markets are reacting to what is known right now. Any renewed signs of escalation between the US and Iran could reverse these moves in oil and equities just as fast as they came in. The risk premium that unwound today can be rebuilt overnight. There is one other angle worth watching. Central banks and policymakers in energy-importing economies, particularly in Europe, will be monitoring whether the drop in oil prices holds. Sustained lower oil prices tend to ease inflationary pressure. After a period of elevated inflation across much of the developed world, that would be a meaningful tailwind for consumers and for the policymakers trying to manage price stability. For now, markets are in relief mode. The practical thing to keep in mind: when oil moves sharply on geopolitical news, the move is often fast in both directions. Watch whether the diplomatic situation stabilizes or shifts, because that will tell you more about where energy prices go next than almost anything else right now. This briefing is brought to you by First Financial News. Clear daily coverage of the economy and markets at firstfinancialnews.com.